Hello family, welcome to this video today. Have you ever wondered what really drives up property prices? Well, it's not just interest rates, it's not just population growth, it's not just infrastructure spending, it's one of the biggest factors, and that is low stock levels. When fewer properties are on the market, but buyer demand is strong, competition heats up and pushes prices higher. It's simple economics. Limited supply, strong demand equals capital growth. And in tight markets, homes sell faster, prices rise quicker, and investors see stronger returns. So if you are looking to build wealth through property, understanding stock levels is going to be important when you're navigating the regional Queensland property market. So in this video today, I'm going to jump in and reveal 6 suburbs across regional Queensland right now that have extremely low supply levels and could be a potential suitor for you as an investment location in 2025. Stick around and let's dive in. If you are an existing subscriber, you should know who I am and what I do. But for those new to the channel, welcome. My name is Troy Bassini. I'm the owner and head of research of Life Buyers Agency. Life Buyers Agency operates under 2 brands in regional Queensland. And what we do is we provide on-the-ground buyers advocacy services in the regional Queensland property market. We operate under these 2 brands here, Capricorn Life and Tropical Life. Capricorn Life services the central Queensland region, Rockhampton, Mackay, Gladstone and Bundaberg, and the Tropical Life services Cairns, Townsville and the surrounding regions around North Queensland. So we work on the ground, we're boots on ground, and we help a lot of investors navigate this property market as well as home buyers. We believe our mission is to help investors mitigate their downside risk and maximize their upside potential when buying in these markets. And we work with a lot of people that are generally struggling to navigate these markets, people that are missing out on property for large periods of time and become frustrated, time poor professionals, or those all around just looking for local knowledge and assistance and get them access to the better quality assets, including off-market property. So if you think you fall into one of those categories, feel free to just book in a call with me and my team, and we can just have an initial discussion to see if we're able to help you. And if not, we can try and at least point you in the right direction. And if we can help you, provide a range of different services that we offer, and we can run you through what that looks like. But yeah, you can give us a call on that number there, guys. Visit us on those websites, and you can check us out on our socials as well. We put plenty of case studies of the properties that we purchased as well for clients on there. Okay, let's dive in and look at the first suburb that has extremely low levels of supply. Now, this is 50% of the equation, right? These low levels of supply is 50% of the recipe you need for capital growth, and the other 50% is high demand levels. So if you have low supply and high demand, you're finding markets there where there is an imbalance, and that imbalance causes upward friction on house prices, and that's where markets rise. So I've dived in today and brought 6 suburbs across regional Queensland that have really low levels of supply, starting with the first one here in Bundaberg in a suburb called Walkervale. Now, for those who don't know the landscape of Bundaberg, Walkervale is a suburb on the inner southwest of Bundaberg. I'll probably say inner south, not inner southwest. Inner south of Bundaberg, you're probably looking at about the best part of a 10-minute commute into the CBD, maybe a little bit faster. And it's one of the older established areas of Bundaberg as well, where generally a lot of the stock you'll find around there is 40 plus years old, and they generally consist of what older Queenslanders, older cottages, older brick veneer properties, generally 3x1s. And then what you find is a lot of the cottages and Queenslanders, they also sit on a lot of large blocks, generally up to a quarter of an acre, very close to town. So I really like Walkervale from that respect, where you can buy some of these older properties not too far from the CBD on large blocks that have substantial development potential. And that's why Walkervale has been a popular one for me, not only last year, but I'm buying a lot of property in Walkervale this year as well, particularly for those with that budget of under $500,000. I think there's plenty of value for money in this suburb. Now let's take a look at its stock level. So right now, Walkervale sits at 0.15%. So right now, at this point in time, there's about 11 listings in this suburb. So from a supply point of view, you're looking at a very low supply environment here, guys, well under 1%. Now, any market generally with a supply level under 3% is considered a low supply environment. And then once it starts to get below 1%, that's when you're moving into markets that are extremely tight and have very restricted supply. So that means that people are generally in a frenzy over property when they come to market because there's not enough listings to cater for that buyer demand. So there often is multiple offer situation when properties go to market, and that pushes up these house prices, particularly when people start to offer over and above list price in order to secure the deal. So this is certainly playing out in a market like Walkerville, and as you can see here, over the last 12 months, it's done 14.6% growth. So it's a market really moving as well. If we have a look at some of these other metrics, we can see that online search interest rates for Walkerville are very high, sitting at 540 unique views per property. So when things are going on real estate and domain, properties are being listed, they're having a lot of eyeballs gravitate towards them, roughly 540 unique viewers per property, which shows that demand levels are very high. When you have roughly only 11 listings come on board each month, then that suggests to me that there is a significant imbalance there just by looking at those two metrics. Don't take that as arbitrary, but just take that with a grain of salt, but they're generally good ways to diagnose and temp check, the supply and demand levels of the suburb by using those two metrics. We can see here that the median house price sits at $470,000, so still a very much affordable suburb in comparison to some of its neighbouring suburbs in and around that inner south of Bundaberg. It sits around some older established areas like Swenson Heights, Avenel Heights, Avoca, the Bevan, a bit further south, and most of those suburbs are all very similar. But I think Walkerville, as it stands right now, is probably the cheapest suburb in there by at least $40,000 or $50,000. So it's really benefited off the fact that it's positioned against some other suburbs where prices have pushed up, and I think a lot of people have pushed into Walkerville purely for the affordability factor. And I think a lot of investors have gravitated towards Walkerville as well because they see a lot of good value for money under that $500,000 purchase price, and where you can still get rental yields close to that 6%. And as you can see here, rental yields are currently sitting at 5.5%, and you'd be looking at an average median rent of around $500 per week. So not a bad suburb there, guys, all around when it comes to that affordability factor and those rental yields. Like, you kind of want that healthy combination of affordability and good rental yield, and then one that also has upside potential based on supply and demand metrics and a bunch of fundamentals. You can see here that the overall dwellings within the suburb is sitting at about 1,300 or 1,400 unique dwellings. So it's not a big suburb. It's probably one of the, I suppose, average size suburbs in and around Bundaberg. There's a few suburbs in Bundaberg that are a little bit bigger than Walkerville. So overall, it's not a massive suburb. It's probably right in the middle. But the good thing about this suburb, guys, is that it's completely established, built out. So it's not a suburb where it's going to be plagued by supply pipeline. I think the only way that supply can increase in this suburb if we start to see a lot of those larger blocks, those quarter-acre blocks up to 1,000 square meters being subdivided, and you're looking at sort of multi-unit dwellings there like townhouses and duplexes. But other than that, there's no other new land to be produced in and around Walkerville where you'd see another 100 lots or so new development happening. It's just not going to happen in somewhere like Walkerville anytime soon because it's a built out and established suburb. A couple of other metrics here. Vacancy rate super low, guys. You're probably only looking at 3 to 4 properties come online here a month for rent. So if you go into this market, you're going to know that your property is certainly going to rent, particularly if you buy it vacant. It's going to rent at a premium at around that $500 per week, and then you get those pretty solid rental returns as well. And then most properties are taking on average around 25 days to sell. So that suggests to me that demand is also high based on this days on market metric as well as those unique search rates online. So you've got 540 unique views per property, and then most properties are taking 25 days to sell, which means that most things are going under contract within the first 1 to 4 days in this market. So a very hot and heated market, and be cautious if you are navigating this particular market, and you have to be pretty quick as well, and you most likely have to offer over and above that list price in order to secure something. But yeah, guys, Walkerville, I think if you are an investor with a budget of up to 500,000 or less, then I think this is a market certainly to consider. And I really like those older blocks, those older cottages and Queenslanders on those larger blocks up to a quarter acre that have development potential. I think that's where the best opportunities sit in this suburb. All right, let's look at the second suburb where supply levels are extremely low, and we're moving north to Gladstone in a suburb called Toolooa. Toolooa. Now, for those who are unfamiliar with the Gladstone landscape, Gladstone, you're probably looking at a population base of around 65 to 70,000 people there, and about a total of 40,000 dwellings across the township. And Toolooa sits, what I would say, southwest of the Gladstone CBD. You're probably looking at the best part of a 15-minute commute into town, and I'd say another 15 minutes if you were to head south and go towards the east coast to places like Tannum Sands and Boyne Island if you want to enjoy the beach. So you're kind of sort of central in terms of where you are located in the Bundaberg area. Now we can see here that stock levels currently sit at 0.25%, and as it stands, there's only 3 listings currently available for purchase in this suburb. So very, very low levels of supply here, guys. But if you actually look at the suburb size, like there's only roughly around 530 dwellings in this suburb, so it's not a big suburb. So we're naturally going to see low levels of supply, but still to only have 3 properties available for purchase in a booming market right now like Gladstone suggests to me that this market is prime for capital growth, particularly if demand levels are strong as well. So moving through some of these other metrics here, we can see that it has roughly around 149 unique views per property, so it's not as high as the previous suburb. But when you look at how many properties are available for purchase, 3 versus potentially 150 buyers, that's still a massive imbalance between supply and demand there. We can see that it's a very affordable suburb with the median house price currently sitting at around $382,000. So a very, very cheap market. And this is probably one of the reasons why I quite like it, particularly in Toolooa if you can stick to some of the better pockets, because it is one of the more lower socioeconomic areas in Gladstone, and you have to be very careful around where you buy in this market. But why I like it is because it's so cheap, particularly when you compare it just to its neighbour 2 minutes down the road in Glen Eden. You're probably looking at a median house price of around $650,000, and you're getting in for what, the best part of $250,000 cheaper in a suburb just down the road. So that's why I think Toolooa could be a great beneficiary of that price ripple effect going forward, providing you stay away from those lower socioeconomic pockets. But we can see here that over the last 12 months, it's surged along. It's done double-digit capital growth, 19.2%. So it's a market definitely on the rise, and it's come off a really low base. But looking at the broader Gladstone marketplace, like this is still a very affordable price point. And even if you compare this to regional Queensland in general, there's not too many suburbs across regional Queensland now in these big regional hubs where the median house price sits under $400,000. So I think this median house price still has a lot of steam in the engine to certainly push up into that 400 mid 400s, I think, over the next 12 months. And in and around Toolooa, as I said, you got sort of a high clustering of social housing there, so you need to be careful of it. But there is some pockets where you can still buy like 422 brick homes for that low $500,000 price point or high 400s. And I think that's where some really good buying is in that suburb, particularly when good 422s in places like Glen Eden, Kincora, Clinton are costing around the mid 6s now, like 600 and above. So there's some really good affordability for good 4-bedroom, 2-bathroom, 2-car configuration properties here, and they're quite low maintenance and sturdy as well. So you can still get them for around that low 5s to mid 5s, and I think that's where a good opportunity sits if you are looking to get into this market. But then you can buy these older Queenslanders as well, and most of those are under that $400,000 price point, or between that $400 to $450 price point for the better quality ones. And if you've got that lower budget, then that's the sort of stock that I would gravitate towards buying one of those, because you can pick those up for that sub $450,000 price point. And I think a lot of them have really good upside, particularly if you get the ones with the bigger yards and the dual occupancy, the ones that have the downstairs legal height, where you can potentially build that out in the future and have additional living space and inhabitable area there in the future. And that's a great value add potential. But very affordable suburb here, guys. We can see that the median rent is $450 per week, and you're looking at about a 6.1% rental yield. So a very strong rental yield here, and I think a lot of investors are going to really like a market like this. But as I said, you want to make sure you go in and navigate this market with caution and stick to some of those areas that have really strong rental demand. As you move closer to those areas where there is a high clustering of social housing, obviously the rental demand is going to drop off from particularly people like families and tenants where you want them to have good stability and security. Not many people want to rent too close to some of those more rougher patches of town. So just be mindful of that, guys. You have to treat this rental return on a street-by-street basis in this suburb. Dwellings, as I said, is one of the more smaller suburbs in Gladstone and one of the more smaller suburbs in regional Queensland for that matter. Properties are taking on average 19 days for them to be sold. So things that go to market are getting snapped up in a matter of days. So 1 to 3 days, properties are gone. So if you are looking to buy in this suburb again, act very fast and come in very strong, particularly when there's only roughly around 3 to 5 properties coming on each month. Supply levels are very low. Keep your notifications on Domain and realestate.com. So as soon as something goes to market, boom, you're triggered straight away, and then you can potentially get the ball rolling on an offer. But I haven't really touched this suburb, guys. I've bought elsewhere. I might look at this suburb in 6 months' time, but it's definitely not one to rule out if you are looking to get into regional Queensland or Gladstone for that matter under that 450 price point. Again, you just have to navigate this market with extreme caution. And the good thing about this suburb as well, finishing off with that vacancy rate, it's sitting well under 1% as well. And the last time I checked of how many properties were listed, currently available for rent, I think there's like 1 or 2 properties currently listed for rent in this suburb as well. So you're looking at a very low vacancy rate environment. So all the data suggests to me that this suburb is primed for another big year. I think it has tremendous upside, but again, you just need to make sure you stick to the better areas. Okay, turning our attention to the next suburb called Park Avenue, and this suburb is in Rockhampton, the beef capital. So for those who aren't familiar with the Rockhampton market, so you're probably looking at about a population base of just over 100,000 people. You're probably looking at about close to 60,000 unique dwellings across the township. And Park Avenue, in terms of where it sits, you're probably looking at Park Avenue sitting on the inner north side of Rockhampton, roughly about a 5 to 10 minute commute into town. So it's actually not that far from the CBD itself. And then if you wanted to commute down to the beach in Yeppoon or Emu Park, you're probably looking at about a 40 to 45 minute drive there. So we can see here that the stock levels for the suburb are currently sitting at 0.19%, and you're looking at roughly about 15 listings currently, and it's averaging about 14 to 16 properties per month listed for sale. So very low stock levels, guys, and it's the suburb in Rockhampton with the lowest levels of supply right now. So Park Avenue is an interesting one, guys. It's positioned quite nicely. I don't mind Park Avenue, particularly if you stay away from the flood zones of Park Avenue. You can end up in some really nice pockets, and it's positioned quite nicely as well, as I said, very close to the CBD, not too far from the Stockland Shopping Centre, so it's very centrally located. It's old and established, so a lot of the properties what you'll find in a suburb like Park Avenue are probably up to 30 years or older. So it's completely built out with no new ability for future supply as well. So from a fundamental perspective, not a bad suburb as well. And it's close to some pretty nice schools in and around that area, like Mayors College and not too far from Heights College and a couple of other public schools there as well. The Capricornia School of Distance Ed and Glenmore State School as well. So not a bad suburb from a location point of view overall. We can see here that when things go online, it's getting roughly around 564 unique views per property. So the data there is pretty good from that click rate point of view. The median house price currently sits at $433,000. So still a very cheap and affordable suburb. And actually, when you look at this suburb compared to, let's say, Norman Gardens and Frenchville, which are also located on the inner north and tend to be the more popular suburbs where home buyers and investors have gravitated towards in recent times, it's a market where you're probably looking at the entry price being about $50,000 to $100,000 cheaper. So Park Avenue, I think, is positioned quite nicely and can benefit from that affordability factor when benchmarked to places like Frenchville and Norman Gardens. And I think Park Avenue, there's some good value for money with a lot of the stock. They call them Ted Price homes in Rockhampton, but basically you're looking at a dual occupancy property where the bottom is brick and the top is either weatherboard or hardy plank. So it's a combination 2-story property, and often you can find these properties on really nice sized blocks. But what you'll find is a lot of these properties are about 30, 40 years old, and they are really, really good investments, and they're very popular as well for owner occupiers because they love those dual livings. And when they're renovated, they can scrub up really nicely. And what you'll find in Park Avenue, you can pick a lot of those ones up for around that sort of high fours, low 500 price point. And then the better ones, particularly the renovated ones, you're looking at around that mid 500s. And yeah, they tend to be really nice homes, guys. And if you can stick to the better pocket of Park Avenue, I'm talking about the pocket not near the industrial precinct of Park Avenue, back towards where the Stockland shopping centre is, in and around there near Yamba Road, you're looking at a really good part of Park Avenue. And I think that area has a lot of upside potential, and a lot of owner occupiers don't mind that area, as well as renters pushing into that pocket as well. And as you can see, very popular market over the last 12 months, where property prices have surged 28.8%. And I think it's been a really good beneficiary of that affordability factor. When it's compared to Norman Gardens and Frenchville, it's actually outperformed those markets, and it's come off a really low base as well. But even at that 433 price point, I still think that's very affordable, particularly if you can push into those better pockets. I believe this median house price can at least push up to 500,000 in sort of the next 12 to 18 months. I believe there's a lot of upside here. The median rents are okay. You're looking at about $480 per week. Obviously, the better renovated homes are getting a lot more, so that rent can be even better, but you're probably paying a little bit more as well. But if you were to buy the average house at around $433, 433,000, you're looking at a return of around 5.6%, which is a decent yield. And what I think right now at that purchase price is not too many opportunities that are good at that price point in Park Avenue, unless they're in the flood zone or unless they need a little bit of work. So I think you probably have to spend upwards of around $480,000 to get something quite decent. And I think if you can buy something decent that doesn't need any work under $450, you're getting a very good deal there. I would definitely jump on one of those if anything came up under that $450 price point, not in the flood zone. We can see here that from a dwelling point of view, it's one of the biggest suburbs as well, 2,629 unique dwellings. Looking at an average down market of 18 days, so things are selling here very fast, guys, in the first couple of days. So you got to act with extreme caution and be very, very quick. And in offers over situation, you generally have to offer over and above that list price in order to secure a property here. And the vacancy rate's well under 1%, sitting at 0.3%. And when I checked this morning, I think there was about 4 or 5 properties currently listed for rent in this suburb. So very low supply levels here, guys. And Park Avenue, not a bad suburb overall. I haven't necessarily pushed a lot of my clients into Park Avenue. Where I could, particularly under that $500,000 price point, where I could pick up deals in Norman Gardens and Frenchville, still I pushed into those markets instead. But I think as those markets like Frenchville and Norman Gardens continue to rise, I'm going to start to look at Park Avenue as the next best alternative, as well as its neighbouring suburb in Kawana. I think those two suburbs are really positioned long term to benefit from that price ripple effect, and they have a lot of upside potential going forward. But if you stick to those better pockets, I think you can't go wrong. Okay, guys, moving north to Mackay now, and looking at a suburb called Mirani. Now, for those who are unfamiliar with the Mackay marketplace, you're probably looking at a population centre there of close to about 170,000 people. And Mirani, in terms of where it's located in Mackay, you're probably looking at the best part of about a 30 to 40-minute commute to the CBD. So it's one of those suburbs that is located on the outer west of Mackay. So it's very much removed from town. And what I've learnt anyway, and what I've seen with this particular suburb, is that it's been a very popular suburb for those that wanted to be sort of in a rural residential setting and removed from town and out in a nice quiet location, and also in an area where you can commute pretty fast to a lot of the job hubs a little bit west of Mackay, particularly the mines, about sort of an hour and a half, 2 hours from the Mackay area. A lot of people commute to those mines from the Mackay region. And what I find is suburbs like Mirani tend to be very popular for those people that are generally working out in those locations. So we can see here that stock levels in Mirani are currently sitting at 0.18%, and there's roughly 2 listings for sale right now. And I think this suburb has averaged around 2 to 4 listings per month. So a very low supply environment. And then when you actually look at the dwelling size, you're looking at about roughly around 770 unique dwellings. So it's not a big suburb when compared to sort of the broader Mackay marketplace, but to still only have the best part of 2 listings currently available for purchase suggests to me that, yeah, very low supply levels here, and demand levels are looking okay as well, particularly around that 200 unique views per property. And as I said, I think it's been largely driven by a lot of people that want to be a little bit out of town, a bit more private, a bit more quiet, and a bit more closer to those job hubs a little west of Mackay. I think Mirani has been a great beneficiary of that as well. And you can see here that the median house price for Mirani is $527,000. And what I've liked about Mirani is that the 4-bedroom, 2-bathroom brick homes are really good value for money there. So you can pick one of those up for around that 550 to 600k price point. Whereas in town, you're probably looking at spending above $600,000. So it's a lot more affordable to push into a market like this and get a 4-bedroom, 2-bathroom brick home on a larger block generally too. There's a lot of really nice big blocks out there, up to 1,000 square meters with these brick homes. And I think they are the ones with the best value for money out there. And they tend to be the most popular ones for rental as well, particularly the ones with side access, a big yard at the back. They tend to rent really well, even a shed, because a lot of people are pushing out there to be in that rural residential setting. They have their boats, they have their caravans, they have all their toys, they want to have pets, they want to have livestock, even like chickens and ducks and things like that. So they tend to be really popular for those people and those type of tenants. And we can see here over the last 12 months, it's a market that surged along as well, double-digit growth, growing at 19.3%. And I think it's still got a lot of room to grow as well. That $520,000 price point, I think it can easily push up to that high 500s by the end of this year, particularly if the supply environment remains low and demand continues to remain constant. I do believe there's still a lot of good value for money in a market like Mirani, but it's not everyone's cup of tea. Those that want to be based closer to Mackay probably won't look at buying out here as well as renting there. So you just have to be mindful of that and look at mitigating some of your downside risk and making sure you nail the right property that can suit an array of different tenants, because you're a little bit further out from the Mackay CBD than most would like, and that's something you have to be mindful of as well. And there's certainly ways that you can mitigate your downside risk by looking at the individual dwelling itself to ensure that it appeals to an array of different tenants, right? And we can see here that the median rents are currently sitting at $550 per week. So you're looking at around a 5.5% yield, and this is okay for Mackay. It's probably not great. You can get better returns in other places of Mackay, but again, some of the properties that we've looked at out at Mirani have had rental returns of above $600 per week. So you can definitely get a fatter rental yield out there. You just have to treat every property on a case-by-case basis. You can see here that the dwelling is not a big suburb compared to the Mackay marketplace. Most of the suburbs in Mackay are around that 2,000 mark, so it's pretty much half of what the average size suburb is in Mackay. And from a dwelling point of view, there is a lot of land in and around Mirani, but it's also close to the Pioneer River, so it is subject to a bit of flooding, particularly when the Pioneer River is roaring. It can flood in and around there, but I know there is some new development potentially staged out in and around Mirani probably over the next 10 years. You're probably looking at another 1 or 2 residential estates. So it's not an established market. It's a market that's growing, and it's a market where it's likely to see future supply there in the future. And I think right now there's a bunch of house and land packages for sale there as well. So you just need to make sure that you mitigate your risk there and look at what that new supply pipeline looks like, and make sure that the stock is inferior stock and not is superior stock and not inferior stock. Sorry, just be mindful of that, guys. We can see here that things are selling 22 days on average. So again, fast moving market. Tread it, be fast, move quickly, and vacancy rate sitting at 0.1%. So supply levels from a listing volume point of view for properties for sale as well as properties for rent are very, very low. Vacancy rate sitting at 0.1%. And when I checked, I think there was only 1 property available for rent there. And in an area where people are pushing in all the time to be close to those mines and close to those big coal basin areas, they often want to rent in these markets. And for supply levels to be this low, I think is crazy. And I have no issue at all if you were to buy in a market like this and it was vacant, because I reckon you'd have at least 30 applications and you'll have people definitely paying a premium above $600 per week if your property was a nice property that appealed to potential families. So yeah, really low vacancy rate environment here, guys. Mirani, all the data looks good. Just tread with caution here. As I said, it's a bit removed from town. I would buy in Mirani, but I would only buy something on a larger block that would appeal to a range of different potential tenants. All right, now we're in North Queensland in Townsville and a suburb called Gulliver. Now, for those who are unaware, Townsville is a big regional city, and it's actually the largest regional city outside of southeast Queensland. So they call it the capital of North Queensland. It has about 250,000 residents. And for those who aren't familiar where Gulliver is located, Gulliver would be about a 10 to 12-minute commute to the CBD, and it's a old established suburb on the inner west of Townsville. So it's quite centrally located. And when I say established, it's probably one of Townsville's first suburbs. And you're probably looking at stock there that would range anywhere between sort of 30 plus years old. And what you'll find in Gulliver is a lot of old brick homes and a lot of old cottages and Queenslanders. And it's actually not a suburb that's flood affected, despite it sort of being, within sort of close proximity to that Ross River. It's actually not a flood affected area as well. So that's one of the good things about this suburb as well. Now we can see here that stock levels are extremely tight in this suburb, under 1%, sitting at 0.13%, and you're looking at roughly 3 listings there, guys, right now as we speak. And on average, I think it's ranging between sort of 3 to 6 properties per month. So all round a pretty low supply environment. And actually, when you look at the size of the suburb, it's a big suburb as well. You're looking at 1,400 unique dwellings. So to only have under 10 properties available each month suggests to me that, supply levels are solid. And obviously, if demand levels are high, then that just equals one thing, right? People are going to be fighting over property, and that's going to create the house price pressure for ongoing capital growth. And we can see here that when properties go to market, they're looking at about 537 unique views per property. So that click rate is quite high. Median house price around that 445,000 median, and that's a very good affordable price point, guys, for a big market like Townsville. I don't mind Gulliver as a suburb. As I said, it's one of the older established areas, so it's really well positioned from a location point of view. What you'll find is a lot of the older parts of Townsville tend to be around that inner middle ring, and all the newer parts of Townsville seem to be out on its periphery. And as I said, a lot of the properties that you'll find in Gulliver are either older Queenslanders or older cottages or older brick block homes. And for me, I think there's a lot of good buying when you can pick up those older brick homes, the brick block homes, the 3-bedders or 4-bedders for under that $500,000 price point. I think if you can get your hands on one of them, they tend to be really good low maintenance investments. But what you'll find is majority of them are generally all still very original. So original bathroom, original kitchen, original roof. So that's just something you have to be mindful of, is that they might need a little bit of work in the short term to get them up to sort of get them up to scratch for tenancy. But I think if you've got a budget of under $500,000, I think you can definitely do a deal in a market like this for those Queenslanders and cottages. They're, again, a little bit on the older side. Most of them tend to be all original, but often you get the ones that have been renovated recently, but you probably pay a little bit more than $500,000 for them, but they tend to be really nice as well. And there's some good opportunities, I think, in and around Gulliver with those properties. And if you can get those ones renovated right now for above $500,000, the 3-bedders or 4-bedders, Queenslanders and cottages, you're going to really benefit from them holding them long term, because fundamentally this location is really good. You're looking at a very central location, close to a lot of really good job hubs, close to some really good schools, like smack bang right in the middle of town, not too far from the CBD. It is prime fundamentally for long-term price growth. No new supply threats as well. So this suburb has a lot of good upside from that perspective, guys. And we've seen it do double-digit growth over the last couple of years, and in the last 12 months, do 26%. So I think this market still has another double-digit growth left in it going forward. I still think this median house price can push up to that low 500s in the short term. I think due to its affordability, I believe, and its location, a lot of people are going to push into places like Gulliver. And we've seen a demographic change there as well. So predominantly baby boomers, blue collar families have occupied this suburb historically, but now we're seeing a lot of first home buyers and younger families move in there that are middle class demographic and buying these older homes and retrofitting them and renovating them. So that's really changing the landscape demographic, the stock quality, the average incomes in the suburb now, because people go, well, should I go out to Bowley Plains and buy something for $600,000 that's brand new and commute 40 minutes into town, or should I buy something in Gulliver for $400,000, $450,000, do a $150,000 renovation, be in town, be close to really good schools, not commute as far, and capitalize on that? And that's what we're seeing. And I still think there's a lot of that yet to happen. And as more and more of that happens going forward, it's just going to make that suburb really, really good. It's basically what Paddington was going back 30 years ago in Brisbane. No one wanted to buy Paddington until, the last decade or so. People have pushed into Paddington and renovated those older Queenslanders, and it's become a really nice upmarket area. And I think Gulliver has that same potential. Yes, there is a little bit of social housing and public housing you have to be mindful of if you're buying in there. So just navigate some of those certain streets with extreme caution. But if you stick to some of those like older leafy green established areas away from that, then I think you're going to do pretty well for the most part. Median rents, you're looking at about 5.7% yield and returning about $470 per week. Obviously, you can get a bit higher there. Just treat every rental on a case-by-case basis. Some of the properties that we've looked at in Gulliver are returning about $520, $530 per week, and they tend to be sort of the older original Queenslanders, and they're generally pretty sturdy and returning roughly around that. But on the lower end, some of the ones that need work, you're probably looking at under $500 per week there. Dwellings, it's a pretty big suburb, 1,400 unique dwellings there, guys, and things are selling very, very fast, and vacancy rates are very, very low here as well. So all around, guys, again, good suburb. Fundamentally, location-wise is good. Bit of public housing, just need to shy away from. Very affordable price point. Older established area. I think it has plenty of upside. If you've got a budget of under that $550,000 price point, I think this is definitely one to consider if you are looking at a market like Townsville. Okay, lucky last suburb in Cairns, far north Queensland, a suburb called Bayview Heights. Now, good old Cairns has about 200,000 people there in terms of its population base. And Bayview Heights is one of about 30 odd suburbs in and around Cairns. And Bayview Heights is located on the inner south of the Cairns CBD. And you're probably looking at Bayview Heights being about a 15-minute commute into town. So very beautiful suburb up there, Bayview Heights, leafy green, elevated part of Cairns. And yeah, been a very popular one over the last couple of years due to its affordability and positioning. Now we can see here that from a stock level point of view, much like the broader Cairns marketplace, stock levels are really tight all around, similar to those other regional areas we touched on as well. And you can see stock levels currently sitting at 0.17%, and Bayview Heights has around 8 listings per month. Very, very low supply levels, guys. For a big suburb like Bayview Heights, about 1,700 dwellings there, we can see averaging around 8 properties per month for sale is very, very low levels of supply. And as you can see, when it comes to the potential demand levels, we're looking at about 1,000 people there, 988 people looking at property every time it comes online in this suburb. So very high demand levels here and very low supply levels. And that's created that imbalance for this potential suburb to rise over the last couple of years and continue to rise over the last 12 months. Over the last 12 months, hasn't done as high as those other markets we've touched on today. That's because that median house price is a little bit more expensive. What you'll find is that the capital growth rates, particularly across regional Queensland in general, they tend to taper off a little bit the higher the price point. And that That's largely because obviously that affordability factor dilutes from the marketplace and investors start to fall away. So as property prices get more expensive and you push into those more expensive areas, the median house price growth isn't as high as some of the more cheaper and affordable areas per annum. So we can see here that this market over the last 12 months has done 8.6% and its median house price sitting at $620,000. So it's the most expensive suburb we've looked at today. And that's obviously played a role in the capital growth rate over the last 12 months. Not many investors will come into this suburb because that price point is pushing a little bit higher and those yields start to really drop off there as well. And not many people are navigating regional Queensland with a budget of what I find anyway, over 600,000. Majority of the people are under 600,000. But for Cairns, it's very difficult to buy in Cairns now, even with a sub $600,000 budget. So if you are someone interested in Cairns, I think the best value for money in Cairns sits between that $600,000 to $700,000 price point, because as you move into that sub 600, it's very hard to buy property there now, particularly good value property in good locations. We can see here that Bayview Heights has median rents of about $595 per week and a yield of about 5.7%. So it's a very popular suburb for home buyers, very leafy green, elevated, not too far from the CBD, but rents are strong here as well because it appeals to a lot of that rental demographic as well, because you're not too far from the job hubs in the CBD, but you're also not too far from the job hubs on the south. So you can actually be quite centrally located in a suburb like Bayview Heights, where you can either commute south or north or to the city for work. And I think that's why the rental yields are so high here and rental demand is really strong in this suburb. That median house price, it's interesting because Bayview Heights has some really nice pockets where houses will sell above $1 million, right? There's some really nice parts of Bayview Heights, but then there's some lower sort of blue collar parts of Bayview Heights where you might be able to buy for around that sub $600,000 price point, but between $600 to $700 is where majority of that buying is. And I think in and around Bayview Heights, there's like a lot of really nice older character homes, and I really like them. I think they're the ones with really good potential, particularly the ones you can get on the larger blocks. And I think if you can buy one of those older Queenslanders or older cottages, 3 or 4 bedders, 2 bathroom, on 600 square meters and above, I think you're going to do pretty well. But what we're finding is that all of the brick block homes, Besser block, newer brick homes, you're probably looking at north of 650 just to buy one of them now. And there's 3 bedroom, 1 bathroom brick homes that are a bit more rough. They're generally selling for that low 600, sub $600,000 price point. Even those ones I think are really good value for money as well. Those 3x1s brick homes in and around Bayview Heights. If you can get your hand on one of them, you'll do pretty well, I think, long term. And I think this median house price has the potential to push up from 620 to about 700, I think, over the next couple of years. So I think the market looks like it's really slowing down here, but I do think due to that really premium pocket of Bayview Heights, I think that's going to really pull that median house price up over the short term to around 700,000. So there's still a bit of growth left in this market for sure, guys. But fundamentally, long term, if you're not after short term growth and you want long term growth, like Bayview Heights is set and forget for that. I think fundamentally very good, no new supply threats, leafy green, beautiful part of Cairns. Long term is going to be very solid for you. I think it can really perform long term, and it's actually still a very cheap market compared to its neighbouring suburbs like Canimbla, like Edge Hill, like Whitfield. Like their median house prices are like upwards of $800,000. So someone like Bayview Heights can really benefit from that price ripple effect and really piggyback off of those more expensive suburbs. But positioning wise, like it offers the same sort of location and public amenity benefits as those other suburbs, and you're looking at the best part of it being $150,000 to $200,000 cheaper. And look, guys, if you are going to buy in Bayview Heights, remember supply is low. Things are selling very fast as well. So days on market, you're looking around an average of 18 days. So things are selling in the first couple of days, act very fast. And vacancy rates are extremely tight here, guys. And that is playing a role in that median rent being so juicy, around that 5.7% returns. And when I checked online, I think it was only about 3 or 4 properties available for rent here as well. So all the data for Bayview Heights is looking pretty good. I think that median house price is going to still move going forward, but not as fast as some of those other suburbs coming off a bit more of an affordable base. but long term, very good suburb, guys, can really benefit from its positioning and being close to some really expensive and upmarket areas of town, and this can really benefit from that price ripple effect.